Mark Yusko, co-founder, chief investment officer, and managing director of Morgan Creek Capital Management, sits down with Paul Barron to discuss Bitcoin, the 4-year halving cycle, and the future of crypto. Mark believes that we are now in what they call crypto summer, which is the market season leading up to the digital halving. This typically reflects the market trajectory going up towards what he believes is the fair value of the currency.
I think the market's going to take us.
Look, I mean, I hate to say it because I don't want to overpromise and underdeliver, but I think we're really just getting started.
Yeah.
Look, the cyclicality of digital assets is real. It's this 4-year cycle, and why do we have a 4-year cycle? Fear and greed. And it's kind of baked into or coded actually into the way Bitcoin in particular works, right? You have these block rewards, the amount of money or the amount of Bitcoin that is rewarded to miners for securing the network. Every 4 years, that number gets cut in half. Now, whoever thought of this, whoever he, she, they, Satoshi happens to be, it's absolutely mad genius. Well, why is it mad genius? Well, it creates movement. Well, why does it do that? Well, if you think about it, the miners, their core costs are basically fixed, electricity and the machines. And so if suddenly your revenues were cut in half because the block rewards get cut in half, most of them will go out of business. So what has to happen? The price has to rise. So there's a built-in movement of the price. And once the price starts to rise, people start to follow, right? That's what traders do. They look for movement. Yep. And then that creates more movement. And so we get this exacerbation of the trend. Now, part of the problem is it starts undervalued because the beginning of the cycle post the halving usually occurs around, a period after the crash, the previous crash.
Right.
So we have crypto winter, prices fall, prices are undervalued, anticipation of the next halving comes along, and investors start accumulating assets. Well, what's an investor? An investor is someone who buys an asset that sells below its fair value. So today, fair value, depending on the model that you look at, the model I like, which is based on Metcalfe's law, says that fair value of Bitcoin is around 55K. Okay, so at 30K, we're below that. So as an investor, I like to buy assets that are below fair value.
As Yusko mentions, the best time to buy is when assets are undervalued. Crypto summer is a longer period of accumulation leading up to the halving where asset prices can make their way back to fair value. What comes after crypto summer? Yusko discusses crypto fall, where we typically see the parabolic run and where assets then become overvalued. This cycle seems to be repeating every 4 years and can be best analyzed using the fear and greed market psychology chart.
Well, now, as of this June 15th, a month ago, now we're in crypto summer. Well, what's crypto summer? Crypto summer is the year leading up to the halving. Usually has an upward bias toward that fair value. So my guess is that between now and the halving in April, we'll drift slowly and calmly up toward that fair value. And then what happens is after the investors get their fill, buying the asset below fair value, then the speculators come in. Well, what's a speculator? Speculator is just the opposite of a hedger. Well, what's a hedger? A hedger is someone that has to sell something because they're producing it, like the miners, right? They're selling their Bitcoin as they produce it to pay for electricity and machines. Well, a speculator just takes the opposite side of that. They're not good, bad, or indifferent. They're just, there's a seller, there has to be a buyer. For every seller, there's a buyer. For every buyer, there's a seller. So that pushes us up above kind of fair value. Well, then what happens is we get the parabolic, crypto fall, kind of the Indian summer, the big move. And that's where the punters come in, right? Yeah. The really levered.
Yeah.
And they're going to push the price way above fair value. And then we'll have another crash, another crypto winter. But so I would say that's a long-winded way of saying kind of between now and the halving in April, my guess is we drift upwards towards 50K.
How,
From
when you look
April to the following April, that's where I think we could double or even treble into the fair value. By then will drift upwards toward that 100K, which is what I think is fair value for this habit.
While we all are anxious for the cyclical bull run, we are all questioning what is going to be this next cycle's best investments. So, what is Yusko dipping his toes into when it comes to building his portfolio?
The question, right? The answer is yes. So, we run a venture fund and we invest in the ABCDs of the digital age.
Yep.
AI, blockchain, chips, and data.
Yep.
And so anything that touches those four pillars, so think of four Roman pillars holding up a temple, anything that touches those four pillars, we want to own. And miners, definitely. Exchanges, definitely. Software and tools, definitely. AI is really just a form of software. It's just a tool. Blockchain technology is a better form of storing value. Chips, right? We're going to have ASICs and AI-focused chips. Those are going to be great investments. And then data, ultimately, it's all about data, right? The future of digital assets is about how we store and process data, how we protect privacy.
Since its inception, Bitcoin has been viewed as a hedge against the destruction of the dollar and other world currencies. The traditional hedge has always been gold and precious metals, but Yusko states that Bitcoin is in fact digital gold. And with the newfound support from Blackrock CEO Larry Fink, it's evident that Bitcoin and cryptocurrency is here to stay.
Right. Well, no, that's crazy, right? If I think about what Bitcoin is, it essentially is digital gold. It's a scarce asset that is held with the anticipation that it will preserve value relative to the destruction of the underlying currency.
Yep.
Right? A bar of gold, an ounce of gold, equals an ounce of gold. Forever and always.
Sure.
You weigh it, it stays the same. It doesn't change. It doesn't grow, doesn't change, doesn't dissipate, stays an ounce of gold. But wait, an ounce of gold is different. For 5,000 years, a single ounce buys a fine person's suit. Right? From the days when the Knights Templar were running around Spain and Portugal, where I just was on vacation, 2,000 years ago, to today, a fine person's suit, 1 ounce of gold.
Yeah.
Money has gone up and down and up and down. Same thing with Bitcoin, right? One Bitcoin is one Bitcoin. But we don't price Bitcoin in Bitcoin. We price Bitcoin in dollars and euros and yen and lira. I always say all the time, there's never been a bear market in Bitcoin in Turkey, because the Turkish lira has gone straight down. There's never been a bear market in Venezuelan bolivars. Not once, right? The value of Bitcoin in bolivars just keeps going up because we're devaluing the currency. So the role of Bitcoin is precisely the role of gold. It's a store of value that preserves purchasing power relative to the destruction. And here's the crazy thing. Larry Fink said this the other day.
Yeah, just the other day.
He said that Bitcoin can protect you from devaluation of the currency, of the dollar.
We look forward to hearing more from Mark Yusko regarding the crypto markets and upcoming bull run. Thank you for watching. Please subscribe, drop a comment and like the video. We will see you next time.